Could uncertainty surrounding the midterm elections be the last straw that breaks the bull market's back? Make sure you tune in to the end of our video to find out how historically midterm elections can shake up the markets.
It got pretty ugly in the markets last week as all the major indices that we track were all negative. The S&P 500 and the Dow Jones both down around 1.3%. The Nasdaq, which has been the leader for the year, was down around 2.5%. And the Russell, which has also been performing pretty well for the year, was down about 1.5%. Now, year to date, the Nasdaq is still the leader, over 8%. The Russell still up over 6%. And the Dow continuing to be negative, down about 1.8%. Foreign and emerging markets were also negative last week. Foreign down 1%, and emerging markets down 1.4%, and emerging markets still the lagger, down over 6% year to date. Chart that we're looking at today is of crude oil. And last time I talked about oil was at the beginning of May, whenever oil had its first breakout around 70 on this chart. Now, crude oil's been in a long-term uptrend since the end of 2017, and that's continued throughout this year. As you can see at the far right, oil just broke out again above the 73 level and is now sitting a little bit over 74, which that breakout was right above the top blue line. Now, oil's been a diamond in the rough this year because oil's up around 23% year to date when all of the other indices are relatively flat or negative. Now, we'll see what happens with oil moving forward, as Trump came out last week and said that Saudi Arabia had agreed to raise its oil production by up to 2 million barrels a day. So again, we'll see what happens as oil's been a leader for the year moving forward.
Last week's news kicked off with the bank stress tests coming out, and the bank stress tests were introduced by the Federal Reserve after the last financial crisis to show the strength of financial institutions. And for the most part, banks passed with flying colors, except for one, Deutsche Bank out of Germany. Then on Thursday, jobless claims came out, and the number that was reported was 227,000 versus the expected 220,000. But there's really no cause for concern because we are still at full employment and at 18-year lows. And lastly, over the weekend, Mexico held elections, and the left-wing candidate Lopez Obrador won in a landslide. So it's going to be interesting to see if the United States and Mexico can start to repair their relationship. This next week kicks off the third quarter for 2018, and historically the third quarter has been pretty tricky for stocks, especially in a midterm election year.
In fact, since 1896, which is the start of the Dow, this has been the second worst quarter of the 4-year presidential cycle. So I wouldn't be surprised if we continue to see some volatility for the rest of this quarter.
Thank you for watching, and we strive to give you everything that you need to know about the markets in 5 minutes or less.
Like our Facebook page and share the video. Last week we got 3,000 views. Thanks a lot. We'll see you guys next week.